right, welcome everybody to the stream. Thanks for coming back, and welcome crypto enthusiasts all, one and all. Today we've had some interesting price action in Bitcoin, and I trade as a hobby, so I'm going to go over that with you. And this is a no strings attached thing. I'm not trying to sell anything. This is just something that I enjoy sharing with you guys on stream. But what I am doing is I am promoting Wise Lending, which is my DeFi lend borrow protocol. So I would like to share a little bit about that, and then I'll get into the trading. So Wise Lending is the most efficient DeFi lend borrow protocol on the market right now. And the reason for that is because it's a DeFi protocol that is built to service both sides of the markets. There's two types of DeFi lending protocols. There's your traditional lending protocols like Aave, Compound, Spark, etc. Those are traditional lending protocols, and they service the lending side of the markets. You can borrow on the platform, but borrowing is really a feature for the lenders rather than that they're catering to borrowers. So they really cater towards the lenders, not really the borrowers on traditional lending platforms. The other type of lending platforms are the yield aggregators. These are your Beefy, Yearn Finance, Gearbox, etc. And so these cater to the other side of the market, which is the borrower side of the markets. They don't really cater towards lenders. You can't really do much as a lender besides deposit this one type of asset for the borrowers to use. And that's why they struggle to gain higher APY, or excuse me, struggle to gain higher TVL than their counterparts, Aave and the other traditional lending platforms. But the yield aggregators, they service the borrowers. They're identifying specific arbitrage opportunities in the market, and they're allowing borrowers to apply leverage to be able to take advantage of those borrowing opportunities. What Wise is Wise is a platform that services both sides of the market. It's a one-stop shop. And by doing so, it fixes the issues that are presented with each of these types of protocols. So on Wise, it's at its core a traditional lending protocol, just like Aave, for instance. So it has the extreme flexibility of Aave and the same safety profile as Aave. Your deposits are protected by Chainlink oracles, just like Aave. And we also have built-in yield sources that allow borrowers to be able to capture an inefficiency in the market and to gain that arbitrage when it's available. So because we have those opportunities available, somebody as a borrower could come right to our platform and participate in Pendle Finance, for instance, Lido staked ETH, and other yield sources just by participating in our platform as a borrower. So we have those options available. Unlike a traditional lending platform like Aave, for instance, you go to Aave, there's nothing to do as a borrower that's easy and one-clickable. Like, sure, you might be able to loop some type of APY on staked Ethereum maybe when the opportunity is available. But most of the time, no, if you're borrowing money off the platform. You're taking it off the platform and then putting it somewhere else, where Wise has integrated strategies for borrowers that when the arbitrage is there and available, borrowers can, one click, boom, access that right on the Wise platform. And because of this, that translates into higher capital efficiency on our platform. If you look at our platform at any given time, you're going to see between 85 and 90% utilization rate, meaning 85 to 90% of the funds are being borrowed at all times. And even the 10-15% that isn't being borrowed natively on our platform for our yield sources, that is actually sent to Aave, where it's at least earning the APY on Aave. Although, Aave's APY is lower than ours, but still, if rather than having the money sit there, they might as well be earning something, even if it is just a little bit. So that translates, higher capital efficiency. Aave right now has got like 50% capital efficiency. They have like 7 billion borrowed. They've got over 14 billion total value locked. So that's actually like even less than 50% utilization rate, like a 40% utilization rate. that translates into higher APY on our platform because we have got those integrated strategies for borrowers. Our borrowers are paying more than they are on other platforms because they have something right on our platform to be able to do and be able to capture that APY and those yield opportunities right away. So compared to Aave, our lending rates for depositing ETH, for depositing stablecoins, they are over double the APY that you're getting on Aave. So very, very cool. So that is our platform. Feel free to ask any questions about that. And I'm going to, answer questions after we do our market updates and I share with you some of the trading activity that I've been doing the last 24 hours. And then we'll circle back around and talk about Wise lending. So going into the markets, if you've been listening to me for the past couple of days, you know that I have been short-term very bullish and even medium-term very bullish as well. And that is based on September 18th Fed rate cuts. Right now, there's pretty much no disputes. Like what people are arguing over now is how big of a rate cut it's going to be on September, whether it's at 25% or 50% rates cuts. So that is good news for Bitcoin. There's a lot of bullish sentiment in Bitcoin. The Fed rate cut isn't the only bullish news. And really, we've been in such a long consolidation period. It's about time that something happens. Like the amount of time that has been after the halvening, we would expect that sometime around the next month or two, we would expect to see, between $70,000 Bitcoin and $85,000 Bitcoin, even as soon as in the next several weeks, for instance. So my sentiment has been bullish. You guys know that. You guys know that yesterday I told you that I was able to enter in along here, and I captured pretty much the entire value of this blue candle. I exited, and then I didn't capture the value of this one. And so when this happened, thinking about where I was going to get in my next trade. Of course, what you don't want to do is when something like this happened, when you have these massive vector candles that go up very, very fast, what you don't want to do is FOMO in at the top. Of course, you don't know it's the top at the time, but after it's traveled this much, very likely that there's going to be some type of pullback. You never want to FOMO in at the top. Then you'd be stuck, and you could be stuck for a long time. So the things that could happen at this point were that it could, retrace back to this yellow line, which is the 9 moving average. And it could have bounced off there and then gone up. Looks, you can see with this little red candle right here, it tried to bounce off of. It didn't really work. But if that happened, we very well could have woken up today and be, $62,000 plus Bitcoin. The second one was that it recovers half of the movement that it's made. So like down here, this dark blue line is the 200 EMA. And so the second option would be that it would bounce off that. And you can see once again, this green candle, it tried to bounce off that for sure. It was thinking about it, but it wasn't able to. And then the third option is that it recovers everything, the entire vector candle. And that's what it ended up doing. Now, vector candles are when there's a lot more volume of trading activity in the market. A blue vector candle means that there is 150% of the average volume, and then a green vector candle means that there's 200% or more of the volume. And it's blue and green if the candle closes positively, and same thing for pink and then red vector candles. It's just the candles closed negatively. So the pink is 150% of the average trading volume, and then red is 200% of the average trading volume happening in those candles. So what I did is I did not want to take a bet on it bouncing off this yellow line. That's too risky for me. So I decided to start layering in at 60,660, which is right here. So I wanted to, like, if it bounced off the blue 200 EMA, line right here, I wanted to like maybe catch a wick and then have a really good entry for if it's, zapped back up. And then I also wanted to include the possibility of it recovering everything down here. And I really liked this trade because we can see we've got the 50 EMA right here on the 1 hour time frame. And then we also have this white line here, which is the 100 EMA. And that's actually the 50 EMA on the 4 hour time frame. And so, I expected it to possibly come down and recover all of the vector candle. And these two big strong EMAs, the 50 and 100, those are important EMAs. They're so close to where I expected it to go that if this trade was invalidated and it kept on going down, then I wouldn't lose that much money because I just, set my stop loss below the white line here. And if it went past that, then I wouldn't lose that much money. And I could go a little bit heavier on my trade because of that, because I didn't stand to lose that much money. So might as well, bet a little bit more on the prospect of it bouncing. There was also a third reason, which was that there's you could draw a trend line, for instance, from this point here to this point here to this point here. So just imagine a trend line, which is also in that same area of invalidation. So I knew if it did come down past here, then my whole trade would be invalidated. Okay, so I set all my trades. And I set them down to actually 59,500, which is down here. And they started filling up on this wick. And then pretty much all of them filled up besides 4 or 5 down here. And then it quickly recovered. So it decided to bounce off the 50 EMA on the 1 hour time frame, recovered all the vectors on the 1 hour time frame, and made this nice, we call this a stopping volume candle. So you see how there's this left a big wick down here. That meant that there's a lot of buys buying it up at this point, and it closed to the point where it created this big wick. So that would be a stopping volume candle. So the fact that it had that nice reaction, that made me very confident to hold my trades, because if you have a big stopping volume candle like that, especially in an area where you're expecting it to bounce, then you can expect it's going to V-shaped recovery, basically. And so that's exactly what happened. So it started coming up here. I did take 25% profits somewhere in this candle up here. And then I actually had to go to bed when we were approaching $61,000. And so I went to bed, I set my stops, and I wish I didn't have to go to bed, because in the middle of the night, it made this beautiful run up. And what I would have liked it to do is I would have liked to see it break through that 61.7 area and go up. This is ultimately what I am expecting it to do very shortly, within the next few days. But it didn't do that. And we could have guessed that it might not do that on its first try, because of the fact that it's recovered all of the vector candles. When there's when there's real momentum in Bitcoin, and if you look at prior run-ups, you will see that when it's constantly breaking new highs and new highs and new highs, it usually doesn't recover the full vectors before it does that. If it bounced off this yellow line and then created a new high, that would be a great opportunity for a scalp, because that the momentum is still here, and you could assume that if it's already breaking to new highs after doing this little pullback, that you're going to get some type of additional upside volatility there. So we could have guessed that it was going to do that. Now, if we look at the 1 day time frame, the exact point where it reversed is actually the 50 EMA on the daily. And now this is making me a little bit more cautious now, because the day before we had wicked up past the center point of the 50 EMA on the daily. And so one would expect, if the market's truly bullish and truly ready to go up, you would expect the next candle to at least close somewhere above the 50 EMA. But instead, it has so far, there's still 2 hours and 45 minutes left in today. So far, it has rejected perfectly off of that 50 EMA, and then it went down again. So this is a reason for caution, but I'm still pretty bullish. And so if we go back to the 1 hour time frame, I was able to get out of my trade, not as much profits as I wanted because, I had to sleep, but got out of my trade. And then when it came down here back to the 60,200 region, I loaded up again, but I wasn't heavy this time. So I'm currently holding a lighter long because of the fact that this is, forming some type of a, you call it a bull flag or a triangle pattern. And so the movements are getting tighter. And that also means it's getting a little bit riskier. Like I still have got this trend line to think about. And I still have, if it breaks down below $60,000, that's pretty much where I would exit this trade at a loss. But like where my entry is and where I would get out for a stop loss is still pretty close. So not risking that much, and I feel pretty comfortable holding a light long position right now. Now there's something else I want to show you, because on the 4 hour time frame, we can kind of see things a little bit clearer. This run up, it was 2 candles on the hourly, but on the 4 hours, just this one big blue candle that we were able to capture about half of yesterday. So it came down, and you can kind of see it. Let me see if I can't make this bigger. You can kind of see it, how it wicked down here, but it didn't quite recover the full vector candle. So you can see this brown box that's remaining right here in the $59,500 region. So it didn't recover all of it on the 4 hour. It did recover all the vectors on the 1 hour. So there's still there's still in the back of my mind was a possibility that it tests the 50 EMA. And then if we look at where our trend line would be, as far as creating a straight line from this point, this point, this point, you could postulate that it could very easily come down into this 50 EMA and then take that full vector candle. Now, if it closed below the purple cloud of this 50 EMA on the 4 hour, then that would be a cause for concern. If it was, well below the trend line that's created right here. So if it was like below $59,000, then that would be the time to exit the position. But currently, I'm holding a very light long. And then I have more orders placed down here around this 50 EMA, just in case they do decide to wick down and grab the rest of that vector candle. Now, the markets are always trying to trick you. And what could possibly happen is that we have some type of a fake out, trap. And we could, go down to 57, 58,000, even as low as 56,000 before we go back up again. And that's definitely a thing that can happen, but I would be out of the market before that. I'd be happy to take a small loss. And I'm happy, that I was able to bag some gains on this movement up here. It was a very beautiful trade, very fun. Unfortunately, I was asleep, so I wasn't able to capture the full extent of it, because if I was awake, I would most likely recognize that on the daily chart, it had rejected the 50 EMA on the daily chart, and somewhere in this vector candle, I would be able to cash out, but I was asleep during that time. So very happy with my position right now. And that's pretty much it for the market updates. So let me go ahead to our chat right now. And we got just YouTube chats right now. So let's see if we can get some chats from X as well. We are dual streaming on X. Crypto Ingrasauce says, here we go again. Let's be wise. Welcome to the stream, man. Thanks for coming out. Raymond says, speaking on trading is a good way to give significance or shine light on wise lending as a one-click action, especially with power farms. Yeah, I totally agree. Myself, I am putting all my trading gains into Wise Lending. So this isn't my only account right here. This is the account that I use for streaming, but I've got thousands of dollars on Wise Lending from various wallets. And, you know, if I did make a bunch of profits, I'm going to put a portion of those onto Wise Lending just so that it grows and grows, because trading is risky. And once I do lock in those profits, I would like to put it into a platform like Wise Lending that's like a crypto savings account. I don't have to worry about risk because it's just going to earn for me every single day. And if I can put a portion of all my gains into Wise Lending, then over time it's going to do really, really, really well. Blue Phone Booth says, hello, I'm here, but no questions. Really good to see you, Blue Phone Booth. Thanks for showing up to every single stream. I really appreciate that. What are the blue ones exactly? What do you mean by scalp? Okay, yeah, good question. So going back to trading, so I think I already answered your question, because the blue candle is a vector candle with 150% volume. So weak, so strong volume, but weaker than a green vector candle, which is the strongest vector candle. Those have 200% or more in trading volume. It just means that there's a lot of transactions going on in this period. And it kind of shows the hand of what the market maker is doing. So, you know, market makers work with exchanges, and they're the ones that provide the fulfillment to your orders. If you want to go long, if you want to go short, a market maker is going to fill that position for you. And so they're the ones with deep liquidity. They're the ones that are fulfilling most of the orders. Sure, you know, there's retail on there too. You can go set an order to buy or set an order to sell on an exchange, and you'll be participating in that. But the majority of it is controlled by the market maker. And so because the market maker is fulfilling your longs and shorts, they are taking the opposite side of the market you are. So when you go long on an exchange, the market maker is going short. And when you go short, the market maker's going long. And so market makers, they're the ones with deep liquidity. They're the ones that can actually move the markets, and they don't want to lose money, and they usually don't lose money. And so what that means is when there's a vector candle, when there's a lot of people getting involved in trading, whether it's going long or going short, the market maker usually comes back to that position. And you can see lately it's been happening a lot. Like, look, you got vector candles. You got vector candles going up right here, and what happened? The market maker brought it back down and recovered all those vector candles, almost all of them right here, and then eventually all of them right here. In doing so, they created more vector candles here, which they got recovered by these vector candles here, which then got recovered the other way by these vector candles here. So this choppy price action over the past week or so is a great explanation of how the market maker makes money in the ranges, because the market maker is you're paying the market maker a fee too on the exchange to fund your trades, whether they be long or short. So they're making those fees, and they're making money on the fact that, yes, they take the opposite side of you, but they always come back into it. And so that's why I pay really close attention to vector candles. Now, it's not a cheat code. They don't always come back into the vector candles right away, like you see here. Sometimes they don't. But this is something that can certainly give you an edge, and it has certainly given me an edge when understanding how the markets are moving, and getting into trades that are going to be mostly a good outcome for me, for instance. So I always trade based off of the principles of the vector candles. And then what was that other question? It says, what do you mean by scalp? Okay, a scalp trade means that you are following the momentum and that you're just in a very short time period. So for instance, let's say I was in a scalp trade. Let's go back to the 1 hour time frame. I was in a scalp trade here on this blue vector candle. I entered in just before this candle formed, and then I exited when it formed right here. So I didn't capture the whole movement. The whole movement was like twice as big as what I was able to capture. but I did a quick scalp, which I was able to capture a small part of it. And I only put myself at very little risk because the market was already going up. I had a lot of indicators to show that it was going to continue going up. And then I was in and out really quick before the market had a time to react, like you see it did. It went up and then it went down. But I just did a little scalp. So scalp is like the really short time frame trading where you're just trying to capture a little piece of the movement that's happening. Then there's swing trading. And so the one I did right here was, over a, 6 hour period or longer. And this was more of a swing trade because it came down and I wasn't following the trend. If I was scalping, then I would be shorting and then expecting it to go down a little bit more and trying to capture that value. No, I was counter trading the trend. So a little bit of a swing trade where, I expected this to swing back up. And that was like a 6 hour trade where I, got in here and then I got out on the swing. So a little bit longer than a scalp. The scalp here was just a 1 hour trade. And then there's like longer trading time periods where you're trying to capture like maybe you're some big whale. And then on this dip down here to $49,000, you just wanted to buy some on spot, for instance, and just hold it until it's higher. And maybe you're looking to cash out now. Maybe you want to cash out at 70,000, 85,000, or 100,000 plus. And that would be like the longer type of trading. So there's different types of risk with each one. For the scalp, you can use higher leverage because you just want to be in and out. And if you're wrong, you're going to know you're wrong really quickly. And then you could just kind of cover your losses super quickly. The swing trading, you want to have less leverage because you're counter trading like most of the time, where you're trying to catch it at the low and then get out on the swing back up, which is what I did here. And then the whale version is you're just on spot. You're not really applying leverage and you're just holding for a very long time. So that's how that goes. Okay, so Raymond says, got it. Great explanation. Okay, great. Okay, so one other thing that I forgot to mention is, have you guys noticed that there's actually a lot more money on Wise Lending? And so I'm so happy that we've been able to see week over week gains. 2 weeks ago, there was just a little over $200,000 total value locked. And then last week there was 250, 260,000. And now we see that somebody has dumped in a bunch of Ethereum. This wasn't me. I actually don't even know who this was, but they dumped in, over $50,000 worth of Ethereum. And so that's actually caused the APY temporarily to go down until someone starts more power farms to capture this APY. So right now, the opportunity is 53% APY if you enter in an Ethereum power farm, but there's only 34 days left. And there's some slippage involved when you do a leveraged power farm. So it's not really good. It's not really good opportunity because there's only 34 days left. If it was like 100% APY, then sure, you definitely make great profit in 34 days, but now it'd be better just to wait for the new one. Now, we also see that our USD power farms are expiring in 6 days, and we are working on getting the new versions up. And let me just show you where our yield sources are coming from. So this is Pendle on Arbitrum, as you can see here. And our pools that we are using is, let me find it. The USDE pool, this one is the 97 days. That's the new one. The old one is, where to go? USDE 6 days right here. You can see that, 10% APY, 6 days. And then this one has a lot more money in it. It's 9.3% APY, 97 days. So once we start this pool, then people can start using stable coins to borrow up all the available. And then our EtherFi pool expires in 34 days. What I want to do is I want to see if we can't get this one going, because this Bedrock one for Uni ETH, I'm going to have to look into Bedrock, and our devs are going to have to make sure that this is a good value and that there's good liquidity to make sure that it's perfectly safe for us to use. But there's 125 days left on this one, and it's 9.7% APY. So if we can implement this one for Ethereum, then our Ethereum APY for lenders could go up to, for instance, like 8 or 8.5% base APY plus the extra rewards. You see this one earns 6x bedrock multiplier and then 1x eigenlayer multiplier. Those are just extra points where they're going to give you tokens after a certain amount of time. So you could go to the bedrock protocol or the eigenlayer protocol, and they'll give you those tokens after their season is concluded. So obviously this is like double the APY that you're getting in the EtherFi ETH pool. So it would be great if we can get this going within the next week or so. And then we do want to launch our new USDE pool. And then we also want to consider launching this pool right here. This is GUSDC, the Gains Network. Gains is a decentralized exchange that allows you to, it's a decentralized exchange. You could long or short the market, and it's a decentralized exchange. I believe their tokenomics are really good. Like, I believe this APY, this 16% APY, I believe that's coming from like the funding rates on the exchange and, the profits that the exchange is making. And exchanges make great profits. So if that's true, we're still going to have to look into that. This would be a great alternative to our USD farms. You can see there's $14.5 million in here already and still earning 16% base APY. So that'd be great. That could bring up our base APY well over 10% for all our stable coins. And so these are things that I'm going to be looking into with the dev team this week. Once we get those implemented, then our APYs are going to shoot up once again as soon as people borrow it up. Once the protocol starts generating revenue, do you have a plan? If so, reward those maybe who contributed to the Wise Lawyer fees letter. Yeah, Crypto Ingrid, yes, that is the plan for 100% absolute. The only reason we haven't started paying those VIPs some type of thank you or bonus yet is because we don't have really any revenue yet. The amount of revenue that we are generating from 314,000 is negligible, because think about it, like what's the average that people are paying? Like 8%, like 8 to, let's just call it 10%, right? So they're paying 10% APY, which means that in a year, $314,000 would generate $30,000. That's what they're paying. And so 90% of that goes to lenders, and then 10% will go to the platform. And so that means that would be $3,000. So in 1 year with 314K deposited, that's only going to generate $3,000 in fees for the platform. And right now, all those fees are going to refers. So this is why we need more money on the platform. We need millions of dollars. We need tens of millions on the platform. Hopefully soon we'll have hundreds of millions and then eventually billions of dollars within the next few years. That's the goal. So once that starts happening, then you're going to start seeing the fees go up, and we'll be able to start doing things. Like really, once we have got like $10 million plus on the platform, that's going to mean we're generating about 100K. 100K doesn't even pay the devs, but at least, if we got consistent revenue, we'll start being able to do something for sure. Also, we're currently in the middle of a VC raise where we're raising $10 million. We've raised $1.2 million so far. And a lot of that money is to build our treasury, and our treasury is going to be deposited on Wise Lending. So we should get, at least $5 million if we're able to complete our full $10 million raise. Some of that needs to go to, marketing, payroll, etc. And also 2 million of it needs to go to buying Wise tokens to give back to those investors that invested. But at least 5 million we should be able to put on the protocol if we are able to get our full raise done. So do we still keep the VIP status? Oh yeah, you never lost the VIP status, man. We got it's all transparent on the blockchain. So if you still have control of that wallet, you still have VIP status. And thank you very much for being a VIP. All right, guys. We're going to go ahead and end it there, but thank you so much for watching. I do this every single weekday, remember, so same time, same place on X, on YouTube. We will be here, and so that means that I will see you guys tomorrow. Hope you have a great day,